Welcome to the Daily Update Podcast, where I'll go over the action in the market for Tuesday, October 28th, and we'll see how things look for Wednesday, October 29th. Going over the action in Tuesday's session, the S&P 500 closed up 0.23% at a fresh record high, finishing the day above its R1 pivot near 68.87 after briefly breaking above 6,900 after the open. The Dow, NASDAQ 100 also posted all-time highs. However, not all indexes participated. The Russell 2000 Small Cap Index did decline slightly. Volume was above average, but late-day selling trimmed the intraday gains. The primary driver was NVIDIA. Shares surged nearly 5% on positive company-specific news, lifting mega-cap tech and semiconductor names. The broader S&P 500, however, showed signs of internal fatigue. The McClellan oscillator has now turned negative, a notable breadth divergence at all-time highs. Looking at the technicals, the bias remains positive across all three time frames. The Stochk RSI, Williams %R, and CCI charts are showing good positive short-term momentum. But price is far away from its 20-period moving average, and the short-term RSI is starting to become overextended. In the intermediate term, the S&P 500 sits in the +3 standard deviations channel and well above the 50-period moving average. The %B indicator remains outside of the upper Bollinger Band. In the long term, price is now 13% above its 200-day simple moving average, a level that has historically warranted caution. There's also a Pring bottom fisher buy signal that remains active. Gamma exposure near 6,900 continues to act as overhead resistance, while the unchanged line provided intraday support. Looking at the macro picture, the 10-year Treasury yield closed at 3.98%, down slightly, with the dollar weaker. The markets are fully pricing in a 25 basis point rate cut on Wednesday that will be announced at 2 p.m. Eastern by the Fed. The real focus will be on the statement and Chair Powell's press conference, specifically forward guidance on December and beyond. Going over the economic data that was released on Tuesday, consumer confidence came in at 94.6, which beat the estimates of 94.2, but down from 95.6 in the prior reading and down from 109.6 a year ago. The FHFA House Price Index came in up 0.4% month over month and stronger than expected. The S&P Case-Shiller Home Price Index is also advanced, up 1.6% year over year, but this was below consensus. Sentiment indicators are improving but are still bearish overall. Our composite gauge rose to 39 from 37, which is an improvement. Looking at sector rotation, sector leadership remains concentrated. Tech and growth did dominate on Tuesday, with semis setting new highs. The financials continue to underperform the S&P 500. Defensive sectors, including real estate, utilities, and staples, closed lower. On Wednesday, after the close, many companies will be reporting earnings, including Alphabet, Meta, and later in the week will be Amazon, Apple, and Microsoft. These 5 names represent a critical mass of market cap and investor attention. Looking at the risks and outlook, despite the new highs, internal weakness is developing in the S&P. The Chaikin money flow has turned negative. The advanced decline momentum is rolling over, and the longer-term overbought composite stands at 89.97. Seasonally, October 29th is historically negative for the S&P, though November and December are among the strongest months of the year. There is still no confirmed Hindenburg omen. Growth-to-value ratios for the S&P continue to show a defensive nature. But to summarize, the bullish bias remains intact across all time frames. The tech sector is helping to drive this rally, and the markets are waiting for the Fed decision at 2 p.m. Eastern on Wednesday. Thank you very much, and I will talk to you in the next podcast.